Hello folks, welcome to this week's edition of the Satori Traders Precious Metals News. Let's jump right into the charts. Cover chart this week is Eskay Mining, and this particular chart we're looking at the weekly time frame, and this is ESK in the Canadian market, so TSX.V. So these are Canadian. That's Canadian money we're talking about here in this chart. What's clear in this weekly chart is that we had a downtrend, sideways consolidation, however you want to look at this. It appears that we've got a decisive change in behavior in this stock. We've got some nice volume. In accumulation and distribution, we can see that investors are interested in this stock, number one, and number two, they have stayed invested while Eskay has done this sideways bumping. They didn't bail on this stock. MACD is in bull mode, currently on a sell signal. Histogram is suggesting perhaps that we're headed back higher. Energy rising off a oversold level in the stochastics. So looking good here in the weekly time frame on Eskay. The reason we're looking at Eskay, I've been a shareholder of Eskay for quite some time. Anyway, the Hedgeless Horseman, I was chatting with someone, Matt. No, it wasn't Max. I was chatting with someone in the comment section this past week and mentioned that one of the excellent resources for information on the internet right now for precious metals and in particular mining stocks is the Hedgeless Horseman. And so you can see there's his website, hedgelesshorseman.com. This gentleman's name is Eric Ketterling, and there it is, so you can see the spelling of it. Oh, I'm sorry, Wetterling. I've mispronounced. I was saying that was a K. It's Eric Wetterling. So kudos to Eric. He does excellent work. So this is he published this in the past week, and he does some superb technical analysis of the mining companies when they release drill results, new reports, whatever it is. He does a great job of interpreting that information and making it readily accessible to lay people like you and I. So if you're not familiar with the Hedgeless Horseman, go out there, look at his resources, and in particular, see what he has to say about Eskay. As always, we can go out to the corporate presentation. We can see one of the companies, I hesitate to say fully valued. In the junior miners, we'd really like to see at this $300 million market cap, we'd really like to see some production or heading into production. So that may be some of the reason that Eskay has done this sideways waffling. They had this big move and became richly valued. I believe going forward, we will see that this is by no means overvalued, and that is the point that HH is making in this article. All kinds of blue sky potential with Eskay. One of the things to pay attention to if you choose to look at this information is that we're talking about VMS deposits. Here it is. So we see VMS. And these types of mineral deposits, as I have learned from Dr. Quentin Henney, they're large and they're high grade. And another key point, they tend to come in clusters. And so it's quite possible that not only does Eskay have one VMS mineral deposit, they could have several. One of the recent exploration techniques they've been doing, it's BLEG is the acronym, and the results have been quite astounding. I love this quote from Dr. Henney. You can't swing a cat without hitting a new drill target on this property, and a large property at that. I think they've got 53,000 hectares, if that's how you pronounce that word. I'm never sure. So point being, richly valued company. It appears that they've got assets that justify that valuation. From a technical perspective, it appears that they have moved from this basing action, corrective action, however you want to look at it, and are in a new uptrend, which of course would be consistent with the rest of the precious metals sector. We can see these pops of volume. Oh, and let me point out, we're down in the daily time frame, and this is the over-the-counter. So now we're in US dollars, and so if you notice a delta, a jump in prices, it's because we've gone from Canadian to US dollars. So on a technical level, SK looks good. In the daily time frame, we've got momentum, energy, elevated and rising. MACD has moved up into bull mode on a buy signal. Again, investors are interested in this stock. They've remained invested. Even though it is fully valued, nobody's bailing. I think people recognize the blue sky potential and the already demonstrated potential. So we're about to kick off a 30,000 meter drill program that's starting in June. And so coming into drill season for SK. If you are looking for junior mining stocks, put this one on your list. As always, go look at their corporate presentation. You can see they're mining in the Golden Triangle, which it's a proven district. It's a good strategy in the precious metals industry. If you're looking for gold, well, go where other people have found gold and start searching there. It's probably a good place to look, and so that's exactly what Eskay is doing here. In fact, they're right next door to the historic Eskay mine, which was a VMS deposit that is still being mined. So anyway, let's not spend any more time on Eskay mining. While we are talking about resources for precious metals and mining stocks in particular, be aware of 321gold.com. This is Bob Moriarty's website, and he does a great job. He produces content himself. I just got done listening to this video. That's a video interview of Bob. I love Bob. He's crusty. He speaks his mind. Kudos, Bob. And then he publishes other authors' content. And so you'll see that there's a wide variety of high quality content here on 321gold.com. And then in particular, for staying abreast, watching what's going on in the precious metals mining space, Bob publishes the news presses and then individual analysis pieces, like this is the Hedgeless Horseman on SK Mining. That's what we were just looking at. And so this is a great resource for the precious metals mining stocks. And so anyway, be aware of that as a resource. Let's jump into the charts. So we had a great week in gold this past week. Last week when we talked, I was talking about price gathering energy below the 200-day moving average in preparation for popping above that level and establishing it as support. And, well, every once in a while you get lucky. Wasn't really expecting it to happen on Monday, but, there you go. And then the bullish move has continued through the week. This candle in particular caught my attention. I was having fun watching it that day. Whenever you get a doji candlestick, it represents a great deal of energy being expended or expressed in the marketplace. This is buyers and sellers, essentially duking it out, fighting with one another. Are we taking price lower or are we taking price higher? And at the end of the day, neither one of them was able to gain an advantage, or neither one of them was willing to commit to a direction. And of course, my bullish bias, I suspect that the sellers were non-economic players. They had an agenda other than making money in the precious metals market. We'll just leave it at that. And so anyway, very bullish action this week. One of the things I've been thinking about in regards to gold and the precious metals, something that Richard Russell always told subscribers is that the markets do their best to frustrate the maximum amount of investors. So whatever the market can do to frustrate the maximum number of investors, that's what's likely to happen. And so in the case of this breakout move in gold, the most frustrating thing that can happen right now is that we don't get a pullback to the 200-day moving average. Basically, that was the test of the 200-day moving average as support, and that's all we got. Think about it from Richard Russell's perspective. If we got a pullback to the 200-day moving average at this point, that's the fat pitch down the middle. And everyone who's paying attention is going to back up the pickup truck and buy gold and mining shares, etc. And of course, that's what the market doesn't want to have happen. And if you and I were charged with managing the gold market, manipulating the gold market, that would probably be our current strategy. We would avoid letting price get back to the 200-day moving average because we know that's where a bunch of people would climb aboard. Back to Richard Russell, what he would recommend to his subscribers is basically a price averaging strategy. Decide how much you're willing to invest in precious metals on a monthly basis, and just whether that's on your payday or whatever your calendar date is, go in on that date and spend that money on mining shares. And of course, start with physical gold. That's where any precious metals portfolio starts, is physical silver and gold. Anyway, back to the charts. This bullish action has set up the potential for price to test the next median line. That's what we would expect from Andrew's pitchforks. And given that we have this significant round number at 1900, what I might expect is a spike up to test this upper median line, which, 1915, somewhere in there, 1916, but maybe not a close above that level at first. This is basically a test of 1900 with a spike higher, but that's what we would expect in Andrew's pitchfork terms. Our next target is the upper median line of that fork. MACD in bull mode on a buy signal, high energy, super bullish chart. Silver is going to play, or is likely to play catch up with gold at some point. In my estimation, silver is lagging the gold action at this point. Once we clear $30 or so, I suspect that we'll see some dramatic movements higher in silver. In the mining stocks, we're in the weekly time frame with GDXJ. Uptrend continues. I mean, clearly we've transitioned back into rally mode, bull mode, whatever you want to call it. The mining stocks are in a rally mode and will be for a while, in my opinion. Here we are in the daily time frame of GDXJ. This is, again, we've got an impulsive price movement and basically a flag, however you want to talk about that triangular shape. And this is an impulsive price movement. The combination of those two, this impulsive action with the flag, gives us a price target. Flags tend to mark the midpoint of impulsive price movements. So it wouldn't be surprising if we already have the potential in place to hit this target up here at, I call it 58. Notice also that we have this open gap, and so we might expect some explosive or more impulsive action interacting with that open gap. In SIL, we see the same picture: impulsive price movement, flag, sideways consolidation, however you want to look at that, happens to be occurring around the $48 round number. And then this action here sets up the potential to get this next price target. It's the upper median line of this modified shift pitchfork in the blue dash line. And then this is a shift pitchfork with the dotted blue lines. And so we've got a couple of price targets up at this level in the silver mining stocks. The interest rates, the yield on the 10-year notes, kind of the energy has flattened out. Obviously, it remains elevated. MACD has flattened out, obviously still in bull mode. All of this is suggesting that the primary trend remains up. The uptrend has lost momentum. It's kind of resting right now. We see that in the daily time frame as well, where we're in this range or sideways bumping, however you want to define this action. But notice we're still in bull mode in MACD, which again suggests that primary trend is up. Energy is elevated. Here in the daily time frame, the moving averages are in bullish alignment. We've got all three moving averages pointing up. 50 is above the 200 and the 20 is above the 50. So full-on bullish alignment, higher interest rates ahead. Here's the US dollar in the weekly time frame. And so still kind of, the dollar's blowing mixed signals. Big downtrend, yes. Also bumping along what could be a support level. So we can't totally write the dollar off yet. We have to keep in mind this support zone down here. Obviously, energy is in the tanker and continues to drop. Bear zone on MACD in the daily time frame. To my eye, this is last week's action. This was just it was a feeble counter trend rally. So we got a one-day rally and then it immediately died out. And then just a confirmation on Friday. Here's price below resistance at this median line and closing below that level. And again, so if we start from this high, here's a lower low. It's lower than that low. Lower high, lower low, lower high, lower low, and I suspect off to another lower low. Bear mode on MACD, energy in the tank, dollar's not looking good. Full-on bearish alignment in the moving averages. So in contrast to what we were just looking at in the precious metals space, here in the dollar, we see the 50 below the 200 and the 20 below the 50. They're all pointing down. Doesn't get any more bearish than that. Equity markets, they're bumping along, kind of struggling below obvious resistance levels. In my estimation, this was overthrow action. For whatever reason, 4,200 was a significant resistance level. We're bumping along. We've actually dropped below that 4,200 level now, and the 20-day moving average has taken over as the current resistance. So nothing particularly bullish in the SPX. If we look at the Dow, it's the same story, bumping sideways below obvious resistance. Nasdaq, if any of the equity markets look bullish, it would be the Nasdaq. We potentially have a double bottom here. Last week, price came up and has challenged the 50 and 20-day moving averages. Friday afternoon, nobody wanted to push that move any higher, and we got a little bit of a sell-off there. But MACD, the histogram, and the indicators are hinting at potentially an upward movement. Energy is rising off that oversold level. So of the equity markets, the tech stocks are looking best at this point. Crude, people are calling for $100 a barrel oil, but you certainly wouldn't see that looking here at the Brent chart. This is just sideways bumping. $70 for whatever reason is a significant resistance level. As I've said, I'm keeping an eye on these US listed silver stocks because I want to see American investors' widespread interest coming into the precious metals mining stocks. And it's kind of stealthy, but notice that we've got rising volume. Accumulation distribution is starting to rise. MACD is in bull mode. We've got buy signal, what is that, 3 weeks or so ago. Energy clearly rising and elevated. This is a nice looking rally building. And something to keep in mind is the fact that it's kind of stealthy suggests that it may have some longevity. It's less likely to flame out and die quickly when we get this kind of slow grinding higher action. And let's see, one more stock and we'll be done. This is Aloro. I've pointed this out a couple of times in the last few weeks. It's just kind of slowly, again, stealthy, I guess that's the word of the day, pulling higher along the 20-day. It's now starting to challenge that previous high, and bullish. MACD is in bull mode on a buy signal. Obviously, energy elevated. Volume looks good. Aloro's looking good, and that's a big. Aloro's got the potential to have 1 billion ounces of silver in their resource. And right off the top of my head, I believe it's Bolivia. Folks, we are at the end. Have a fantastic week going forward, and I look forward to talking with you again.